So welcome to our first interview of Tea Talks with OnLadder. Joining us this time will be Jackie Bennett, non-executive director for OnLadder, OBE, and former director of mortgages at UK Finance. The subject of this interview is going to be primarily around customer fairness and the origins of it during the financial crisis, how it's evolved since then, how it held up during the pandemic, and then where is it going from here? And there's no better person to talk to about this than Jackie. Welcome.
Thank you.
First things first, who is Jackie Bennett? If you could just give the audience a bit of your background.
Sure.
Yeah. That'd be great.
So I've been in mortgages and housing now for just over 20 years. I started out in the Home Office as a civil servant and have gradually worked my way from police and criminal policy to mortgages and housing. Most of my time in mortgages and housing has been with trade bodies, so the Council of Mortgage Lenders and now UK Finance. I've also got some commercial experience as well with a couple of mortgage lenders, which was really, really valuable to have that insight. And now I'm doing a bit of a portfolio role with a number of different strands to that. And during that time, I've been through the boom of the early 2000s, the financial crisis at the end of the 2000s, then the recovery, and then I'm not quite sure where we were, and then of course we had the pandemic as well. Right. So yeah, I've seen the cycle through, and obviously, unfortunately, it looks like we're heading into the next stage of another cycle now. So yeah,
and I'm sure we'll be talking about that a little bit later. Just to start things off, customer fairness. What is it? Just a brief, the basics of it would be great.
Yeah, I mean, I think it should be the thing that goes through the whole business all the time, is thinking about what's fair for the customer. And fair doesn't necessarily mean treating everybody the same. So we've had this concept of treating customers fairly from the Financial Conduct Authority for a long time. And I think a number of people thought that just means everybody's got to be treated the same, have got to be priced the same. And that's not it. You've got to price for risk. You've got to differentiate between different customer groups. But that doesn't mean it's not fair. It's fair that those customers who are more risky have to pay a little bit more to counteract that risk. Because at the end of the day, lenders are profitable businesses. They're there to make money either for their shareholders or their members in the case of building societies. And so, there needs to be that balance. But it is about, on a day-to-day basis, trying to put the customer at the heart of the business and making sure they're getting the right outcomes.
Yeah. And what you're talking about with being flexible at the point of sale with different customers getting different treatments, that also happens after the point of sale too.
No, absolutely.
As customers go along, things could potentially happen to them.
Yeah. Where
the lender needs to be a little bit more proactive.
Yeah, no, absolutely. And I think particularly when customers get into arrears, and I think that's where we saw the big change. So I think as we sort of headed into the last sort of financial crisis at the end of the 2000s, I'm not sure there was as much differentiation in the way customers were treated as there is now. It probably was a little bit more of a call centre type approach in dealing with customers. And I think, from then to now, we've seen a complete sort of paradigm shift in terms of the way customers are treated, how they're treated as individuals, and the individual solutions that lenders can offer customers.
Oh, definitely. This is something that we've definitely seen as we've gone through the FCA process, and as we built this. It's when we're talking with mortgagors, it's not about can we get them on the ladder. It's about what happens after.
Yeah.
Like what are the different scenarios that they could be put in, and how is our loan structured in a way that could potentially protect them?
Yeah, and I think the other thing we've seen is lenders valuing keeping customers rather than switching them people switching every couple of years. And again, I think that's been another shift that we've seen in the market because, as I say, I think lenders have got a lot smarter that actually it's cheaper to keep the customers that they've got than try and get new ones.
Right.
And so we've really seen the growth of product transfers, which is where where the lender will offer a customer a new rate at the end of their fixed rate as they come to the end of the fixed rate. And we're seeing probably about 2/3 of people actually taking that product transfer at the end of their first fixed rate period rather than remortgaging away, going to another lender.
Because remortgaging it's obviously it's easier than moving homes.
Yeah.
But it's moving homes just without the finding the new home part. It's an arduous process.
Exactly, and you still need to go through the affordability. If you change lenders, then you still need to go through the affordability assessment all over again. And obviously, it is easier for the customer because a lot of lenders will now do this online or over the telephone, just to be able to switch to that new rate without going through all those hurdles. Having said that, if a customer if there's been a life event, if they've changed their circumstances, it's always worth advising them to go to a broker who can make sure that they're on the best deal for them and their circumstances at the time.
So how did customer fairness originate? I'm assuming this happened during the financial crisis, but yeah, if you could.
Yeah, I mean, I think it was always there in some organisations. Some organisations were better at it than others, and I'm not going to, name any names or call out any particular types of organisations. They know who they are.
Yeah.
But I think this was trying to embed it into the market more generally, and so the FCA. I actually can't remember exactly when the TCF rules were sort of introduced by the FCA, but it was that trying to embed what was already happening in good firms into every firm, and just trying to make it so that it was a bit more than transactional with the customer. It was about, as you say, that treatment through the lifetime of the loan with the customer, so that it's a better journey. It feels more customer centric.
Yeah. And what was your role during the financial crisis, but when instituting the customer fairness principle?
Yeah, so I mean, I was at the Council of Mortgage Lenders at the time and head of policy there. So, was dealing with day-to-day interactions with the government, with the FSA as it was back then, and just trying to understand, how we could help customers better at that time. As I say, I think up until that point, arrears have been running pretty low. There wasn't a lot of expertise in how to manage customers in arrears in a sort of big sense. And so at the time, I did a lot of work with lenders and with people like local authorities, the third sector like Shelter and Citizens Advice, just to try and get everybody to understand that actually the best thing they could do was speak to their lender. Because a lot of people, when they get into problems, they bury their head in the sand. They don't want to talk to anybody. And actually, that's the worst thing they can do, because the earlier someone approaches the lender, the more options there are open to them. So, as I say, I spent a lot of time around sort of 2007 to 9, going around the country, like I say, speaking to lenders, local authorities and others, just trying to explain the options that were available to people. And also, working with the lenders to move on from this sort of transactional type approach to really understanding customer circumstances and making sure that actually they got a solution that really worked for them. Because the situation was so bad for some families and some households, I was one of the architects of a scheme called Mortgage Rescue. So this was where housing associations actually purchased a customer's property and rented it back to them when they were at threat of repossession, when they couldn't afford to keep it for themselves. Yeah. And that had a huge benefit for those families that went through that, because they could stay in the same home, kids could go to the same school, and there wasn't that stigma about being repossessed. Nobody needed to know. Things would just carry on. And obviously it made it much more affordable for them. But the other thing that we found through having the scheme available, and as I say, this was a collaboration between the lending industry, the housing association sector, government, local authorities, say Shelter and others. The other thing we found is simply by having the scheme available, it encouraged lots more people to come forward. So even if they didn't want to talk to the lender directly, they would go to Shelter or they would go to their local authority. And by having those conversations, you can then start helping those people.
Right.
It's a bit similar to where we are now, because actually you need to look at the customer's overall situation. And actually for some customers, it might be about making sure that they're claiming all the benefits that they're entitled to, making sure they're on the best tariffs for energy and phones. And I know there's obviously not a lot of choice right now, but all those little things can add up. And there's plenty of help out there. So as I say, I did a lot of work during that time, and that's also when I was awarded the OBE for the work that I did with government at that time, just trying to keep people in their homes. And actually, I'd like to think, that we did keep more people in their homes than might otherwise have been the case. And also since then, arrears and possessions have run at really, really historic low rates. And I'd like to think, a lot of the lessons that were learned at that time, some of which were then codified into new mortgage rules in 2014, actually that sort of stayed with the industry and was probably really one of the early catalysts around that customer fairness and making sure that, we didn't abandon people when they got into trouble.
Going back to what we were talking about a little bit earlier around not being transactional.
Yeah.
It's more of going from reactive to proactive.
Absolutely.
Really with them. Instead of keeping it transactional and just going like, oh, we'll get them on one deal and then they'll go off to another lender. It's about creating more of a relationship through product transfers,
absolutely.
Or through providing them with options in case bad things do happen to you financially. So really, customer fairness, it's not just some regulation, or it's not some burden on these companies. It's actually, if they look at it the right way, if they have the right mindset, it actually enables them to have more success.
Absolutely, and you see in other industries, don't you? Sort of people are very loyal to, Waitrose or John Lewis or, whichever companies that have that real brand trust and awareness, and they will go back to them time and time again because they have got that longer term relationship with them. It's not just about that day-to-day transaction. And I think, that's what we've seen happening in financial services over the last sort of 10 years or so. It's that real shift in terms of how you do that. And I mean, even now, lenders are looking at the customer books that they've got. They're looking for people who might look like they might be starting to get into trouble, and actually proactively calling them. Now that works two ways because some people are going, hang on a minute, you've been checking up on me,
and just it's like, how do you know what you know?
Exactly, but equally, there are people who are very grateful for that sort of early warning,
right,
and for that call. Mm-hmm. So, for example, Virgin Money at the moment has partnered with an organisation where people can check whether they're entitled to more benefits. Mm-hmm. And make sure that they're claiming all the benefits they are entitled to. And actually, I think they found, a pretty good proportion of people who've been able to increase their income by hundreds of pounds just by going through this tool. And these are the sorts of partnerships that lenders are building all the time. We've seen other lenders, Lloyds, for example, partners with cancer charities to support people who are going through cancer treatment and might not be able to to keep up their payments during that time. Mm-hmm. So we're seeing more and more of these partnerships sort of coming up where it's not just about that sort of lending relationship. It's trying to think about the customer's wider circumstances.
The financial crisis, it acted as kind of a catalyst.
Definitely.
It really kind of propelled this concept of customer fairness. And since then, it's been a transition. Some companies were doing it, and now, well, maybe not all, but the vast majority have really embraced it. And that kind of leads us to the most recent crisis that we've had, which was during the pandemic.
Yep.
And life, the economy, essentially everything stopping.
Yeah.
And that had an effect on the mortgage market as well, on borrowers.
Absolutely. Yeah. Absolutely. It turned on a sixpence, really. It was, one day things were normal. Mm-hmm. We went home. We saw the Prime Minister on the television telling us all to stay at home. That wasn't just us as customers, that was the whole industry. So suddenly all the lenders had to switch from everyone being in the office to everyone working from home.
Right.
And although they've all got their business continuity plans, had anyone ever really tested having everyone working from home almost overnight? Mm-hmm. But they did it. And, within 2 weeks, we'd got payment deferrals in place so that people could pause their mortgage payments for a period of time if they could see that this was something that was going to cause them difficulty. Initially, it was intended to be there as a sort of a bit of a stopgap until furlough came along. Mm-hmm. In the end, it ended up being there for quite a bit longer because it did help people manage their finances in the short term. But it made me proud to be part of the industry, to see how quickly they responded. And I was talking to members, well, at all times of the day and night, almost, right, during those very early days.
I bet, yeah.
Because this was something we'd never faced before, and so not only were they dealing with, as I say, making sure that all their staff could work from home, and that they could do so in a compliant way, and making sure, data privacy and all those sorts of things. So they had to do all of that. And by the way, we're introducing this brand new thing of mortgage payment deferrals. But yeah, the industry stepped up to the plate, and I think in the end there was over 2 million mortgage payment deferrals over a period of about a year or so. So, a big success story in that sense, I think.
How did it happen with the payment deferrals? Was it more of, did the government suggest it? How did that, yeah.
Yeah, so I think it was a conversation almost over a weekend. I think everyone was thinking about, what could we do? And it was a conversation between sort of our chief executive and the chancellor. Almost over one weekend, it was like, look, this is an idea that we've had. And then obviously we brought it into, well, I was going to say into the office, but it wasn't in the office because we were all at home.
Yeah.
We all learned how to use Zoom and Teams really, really quickly. And yeah, we sort of, and then you're trying to get people to jump on calls at really short notice to see how this is going to work, between ourselves, the government, Treasury, the Financial Conduct Authority. You're just having these sort of crisis meetings, and everyone was just bringing good ideas to the table about how we could make it work. And as I say, it was up and running within about 2 weeks, which is phenomenal from something that just hadn't even been thought of before then.
And this is, that's a great example of how things have gone from reactive to proactive.
Yeah.
And it's just the industry stepped up to the plate, made some changes, and allowed 2 million deferrals to happen.
I think it's also the benefit of having an organisation like UK Finance, which can coordinate in that really quick way. And it's good for government, it's good for the Financial Conduct Authority, because they've got one lead organisation to talk to rather than trying to talk to however many lenders there are. So, and I think that sort of collaboration, I've definitely found that particularly in the mortgage industry. It's there through other organisations as well, but mortgages is what I know best, and it's something that's been there. Like I say, particularly since the last financial crisis, they've worked together really well in lots of ways. And as I say, you ask them to step up, and they're there, and wanting to do the right thing by customers.
This is probably a good time to talk about what's next, really. So there's been some great strides made. Obviously, this new approach tested well during the last crisis. But what are the plans going forward for customer fairness, and how is it going to evolve over time?
Yeah, so the FCA's latest proposals are around consumer duty. So we've seen a consultation paper. Sort of final consultation paper that came out in December. We're expecting to see final rules by the end of July and guidance. And that replaces the 6 treating customer fairly outcomes that we had previously with 4 new outcomes under consumer duty. I think what the FCA is looking for now is the evidence that firms are really putting customers at the heart of their business and checking that the outcomes that different customer target groups are getting, and are they the right ones? Are they fair? Are they good outcomes for customers? So I think the FCA is seeing it as another paradigm shift. I think for some firms it's going to be a bigger shift than others. Again, I think a number of firms, have been thinking in this way for a long time. I suppose I do worry a little bit about whether it makes firms become quite internally focused as they collect the data and evidence which the FCA is going to want to see. And actually that their boards are now going to be required to see on a regular basis. And actually that maybe slows down innovation potentially in the market while they focus on making sure they've got all their ducks in a row to be able to demonstrate that they're doing all the things that the FCA would like them to do.
Because there's all sorts of, there's going to be all sorts of changes operationally to processes for their existing products. So new products coming along, they might be a bit hampered in a bit, or they might not be looking to that necessarily.
Potentially, and I think that is a risk, from this, because it is going to require, even if they've got a lot of these measures in place, they're going to need to reframe how they present them, how they think about them. Don't get me wrong, I think this is another positive change, and it will be for customers.
Right.
I just think as we go through this transition, it is going to mean, like I say, maybe a little bit less innovation while firms focus on getting themselves into the right place for consumer duty.
With all of this going on, all these changes that these firms are going to have to implement, I guess, what's the biggest challenge for them, I guess, coming out of consumer duty? And then what advice would you have for them as they try to navigate this new principle?
I think it's going to partly depend on where businesses are in the journey. It will depend what management information they're already collecting around conduct measures, because that's largely what this is going to be about, and thinking about how do they match up to what the FCA is asking for. If they're close, it might be a bit of reframing. if they're a long way away, they may almost have to go back to the drawing board a little bit and think about how they're going to do that. I also think if they're bringing in a new product, for example, as you're thinking about with OnLadder, it's a great opportunity to start in the right way so that you actually frame it and you make sure that the product meets all the consumer duty requirements right from the beginning. In terms of advice for firms, the first thing to do for me would be a gap analysis against what the FCA is requiring. What do you have in place already? Where do you think the gaps might be? Because there's 4 sort of key areas of consumer duty. And I think you take those 4 individually. So I think it's around products, the governance around products. It's about customer communication. It's about customer service. And it's about fair price and value. So each of those areas, and the FCA guidance is really quite helpful in terms of what they're looking for. Albeit that I'm sure there'll be lots of details come out as firms start to try and implement it. But take each of those areas separately, look at what the FCA is asking for, and then think about what that means for each of those areas within a business, and involve the company. I think actually for me this is one of the sort of biggest opportunities almost around consumer duty. This is going to hopefully get compliance embedded within the business. It's not just going to be the compliance officer's role to tell people what to do or what not to do.
Right.
This is about getting everybody to think about the customer and how that works. And I think that's a great opportunity.
Yeah.
So for progressive companies, I think that's going to really be beneficial.
So it's kind of like the same principle with customers making sure to reach out to their lenders. It's just like, don't be shy. This
Exactly,
is a major time of change.
Yeah.
So internally at these companies, you can't be siloed. You have to be talking across departments.
And customer communications, I think, is a classic one. The FCA advises actually testing your communications on real life customers. Do they understand it? And I know from my own experience, having worked in a couple of firms and read some of these letters, it's like, I don't understand this. I think the average reading age of the British population is about 12. There are plenty of things that you can find online that will actually give you a reading age for the literature that's published. And I'd be surprised if many met them. And, when I look at some of these letters and I thought, well, if I don't understand this, how does a poor customer, who's probably not as financially literate as I am, how on earth are they supposed to understand it? So it's about trying to empower customers as well so that they really understand what they're getting into, and they're not going to get caught out by something unexpected happening just because they've been given something that they don't understand. That's
a big effort, a big push for what we're doing on OnLadder as well. It's just like, because we're starting at the very beginning, because we're, all these consumer documentation is being put together, it's putting an emphasis on the plain English approach.
And as you know, it does make you think about what it is that you're trying to sell and how you can explain that in the best and clearest way to the customer. We've had those conversations, haven't we, around how does that read? And you're saying these things, what evidence have you got to back that up? Where's that come from? So I think it's almost a very useful exercise, because if you can't explain it to yourselves, then how do you explain it to a customer?
And this goes back to what you're talking about, not being afraid to reach out to different departments. It's that same, like, not being shy and being willing to communicate and really, put this in front of the right people. And the right people are definitely customers, potential borrowers. Yeah. It's not just about us talking about it in our own silo. It's about after we've obviously spruced it up quite a bit, take it out there and test it. Yeah. And that's how you find out. So
ultimately, I think you can only do so much within the firm. However good you think it might be, you need to test it on real customers who might just view it in a completely different way.
Right. That's exactly right. I think this is probably a good time to wrap it up. But on that note, thank you very much for coming in, Jackie. Thanks for sharing your stories and providing us a lot more background on the origins of customer fairness and just how important it is to the industry.
Absolutely.
Yeah. Thank you.
Okay, you're very welcome.